And welcome into America's Retirement Headquarters. I'm Nolan Baker. I am joined by Jeremy Baker. So great last name, but no relation. We've been working together for quite some time here at America's Retirement Headquarters. Today, what we're talking about is we're talking about how President Biden could impact your retirement. You know, it's a 1 year recap into the update in the economy and the markets on President Biden. And today's topic, we're going to really dive deep into inflation. So, this is a great show that you want to stay tuned to. But before we jump into that, here's a copy of our disclosures and contact information. If you'd like to read through all of that information and write down our contact information, I'd encourage you to just pause the video and you can get that information and jot it down. But, again, today's topic, Jeremy, we're going to be talking about is skyrocketing inflation. If we look at it, we really haven't seen inflation like it has been for a long time.
It's true. I mean, I've been in this business over 20 years, and inflation really hasn't been a topic for discussion since the 80s, the Reagan years, and that was just a topic for discussion as far as looking at history and the impact inflation had in the past. So it's definitely a new topic.
Yeah, so today's show, we're going to break it down into some of the areas that may be concerning for those of you that are watching. But we're also going to finish up the show telling you about a tremendous opportunity that you also can take advantage of for a saver. But here, what we can see on the chart is just like you talked about, is that inflation hasn't been this high and dating back for quite a few decades. So if we look at it, let's talk a little bit about what the reasoning is for some of the inflation problems. And if I had to ask you, Jeremy, what do you think's causing inflation?
Well, a number of things, government policy, and with the bailout packages, the government just basically is printing money and giving it to people, which is causing the cost of things to go up substantially.
Well, we have seen that, and of course, if you watch the other series we just talked about, how the House passed another almost $2 trillion spending stimulus, so that policy has definitely impacted things as well. We also look at it and look at some of the financial boost that has happened. Of course, that's boosted the stock market, but it's caused some pent up demand, if you will. It doesn't take too much to talk about the supply chain breakdown that we've had.
Sure.
I think we had sent out a video about our upcoming Christmas party that we have, and it was a video of like the guy from Pirates of the Caribbean going over to take over a ship to try to get some Christmas presents because rumor is they may not be here in time if they're stuck out at sea.
Yeah, it's odd. People actually want to spend money and they're not able to in some cases because there's the goods and services aren't here, not available to them.
Yeah, it's creating the rising production costs. So we've seen that production cost go higher with like building materials. As you work around the house. I know lumber's come back down here recently, but lumber, during this summer when I was looking to boat, some friends of ours were looking to redo the deck of their pontoon boat because it had rotted out, and the price of marine board was just, really out of control here. We see the price of things like graphic cards and NVIDIA graphic cards and where the price has gone there. Going back to what you were also talking about earlier, with the government paying people not to work, what it's done is it's create this wage problem.
Sure.
Who wants to go to work for $10 an hour now?
Yeah, why wouldn't you when the government's paying you more to stay home?
Yeah, so the question is are these things that are happening this year something that's going to go away pretty soon? And, I don't think it really is. I think inflation's been an issue. And in fact, if we break down inflation a little bit deeper, we can look at this chart here. This chart shows you the 12-month percentage change as of September 2021. If you look at all of the items, it was about 5.4% in September.
Sure.
Now that number has, gone up just a little bit since then. But what categories or what areas do you think are impacting a lot of the retirees that we talk with?
I think, the biggest two are food and energy. And I know those aren't considered in the cost of living adjustment for Social Security, oddly enough, because most people do need to eat and they do need to, with winter coming, warm their house. And a lot of retirees are traveling too, and that energy inflation is definitely impacting the cost of vacations, jet fuel, things of that nature. So when you look at even overall, as the cost of goods go up, if you're not prepared for that, if all of a sudden what you're spending your money on is going up 6, 7%, and maybe your safe withdrawal rate might be 4 or 5, then you're quite a bit behind the 8 ball.
Yeah, and if you look at this chart here, what it shows is that meat, poultry, fish, and eggs is up 10.5%, so it makes the turkey at Thanksgiving just a bit more expensive. And as you pointed out, if you look at this chart, if you look at energy commodities up 41.7%, fuel oil up 42%, gasoline up 42%, it really does impact somebody that's close to or in retirement time, especially the generation that's living more on what we might refer to as a traditional fixed income. The other issue that we had talked about a little bit about the market in a previous segment when we were talking about 1 year into the market update, and of course, if you missed that segment, you can watch the whole show on our YouTube channel. Again, just swing over by America's Retirement Headquarters on YouTube, and you can watch the market update show that we just did. But Jeremy, I've got to ask, is 4 the magic number?
It seems to be. History tells us that over time, 4%. 4% is about a normal number for inflation. Like I said, it hasn't been an issue over the last couple of decades. I mean, you might have seen some 16s, some 17s back in the 80s, and that's when it averages out, that's fine. But we want to make sure we can avoid those type of sharp rises, especially coming here in the future. Like I mentioned, with the Social Security, the cost of living went up almost 6%. So it does sort of combat that 4% number. But it looks to be, to answer your question, it's kind of a long-winded answer. But yes, 4% to me looks like it is the magic number.
And the other magic number to take into consideration is the one that we have up on the screen here, which is since the S&P 500 was created in 1957, U.S. inflation has risen above 4% 9 times, and in 8 of the 9 times, the stocks were lower 3 months later. So the exception was 2005, saw inflation fall back below 4%, almost immediately, calming investors. And keep in mind the S&P 500 index is an unmanaged index. You can't invest directly into it, but not only would it create some inflationary concerns, it could create concerns overall with where the market's headed. The other thing that I think is oftentimes when we meet with people that are close to or in retirement time, we ask them, well, how much income do you need in retirement? And a lot of times they say, well, I need $5,000 a month.
Sure.
And, $5,000 a month, when they build out their plan, they might just put in $5,000 and, use that number for what their income needs are for the rest of their lifetime. But the question I have is, have they stress test their plan with the impact of inflation?
I think that's very important. When we look at stuff for, looking at the retirees' investment plans, we kind of take a look as fiduciaries at everything that could impact it. Our topic today is mainly inflation, but we also look at it longevity and taxes, which are 2 other things. When you combine it with inflation, people are living longer, healthcare is going up, cost of goods and services are going up. If that $5,000 a month now becomes $6,000 a month that you need just because of inflation, then you could be in quite a predicament if you haven't planned for it.
So the key takeaway is if your current retirement plan has not been stress tested on the impact of how inflation could increase or decrease the probability of success during your retirement years, make sure you get a hold of us. We need to stress test it now that inflation has gone back up. But more importantly, let's talk a little bit of an opportunity alert. And what I would say to that is most of you that are watching, if you're like me and maybe have a little gray hair, you're probably familiar with what I would refer to as savings bonds, right? My generation, when we were young, it was grandma and grandpa bought us a savings bonds for our birthday, and that was something that maybe we set aside, and one day we're able to use it for college or a wedding or the first time home purchase. But for younger folks, savings bonds haven't really been something that's been a topic for a while. In fact, you can't even go to your local savings bank and get a savings bond. So I think it's because interest rates have been so low. But what's happened here recently with the government savings bond, and why is this a huge opportunity alert for anybody that's watching this video today?
Well, we just learned about this actually a few days ago in November. The government raised the I-bond interest rate to 7.12, which is, again, very high. It was around 3.5 the previous month. And it's interesting because I had a discussion with my godmother about 6 months ago, and she was wondering about how to even buy I-bonds or Series EE bonds. And I sent her a text message today, which was funny, because she's down in Florida, and I said, do you know what the I-bond rates are? And she said, what, about 3.5? And I said, no, 7.5, or 7.12. And her response on the text message, being funny, we should talk about, grandmothers and grandparents, but her response was OMG, which is, oh my gosh. And, then the discussion became, how do I get them? How do the interest rates work? So I think that's an excellent opportunity for many investors. We haven't seen, I think it was the second highest rise in history. So 7.12 on a fully insured product sponsored by the United States government is an excellent opportunity for investors, especially to outpace inflation.
Yeah, and we've got all the key characteristics here up on the screen, but a great opportunity alert for anybody that's watching that wants to put some lazy assets to work. Again, government I-bonds are opportunity to consider right now in today's environment. And really, when we're talking about inflation, I think the key takeaway from today's show is to not wander and wait. And the thing is really to be prepared and kind of take action. So there are a couple different steps that you can take based upon today's show. So number one, as Jeremy pointed out, have you stress tested your plan to see if there's any weaknesses, whether it's the market at record high, whether it's inflation that gets out of control? Have you, in your current plan, created a bucket of money that's designed to give you a pay raise in the future, regardless of what happens in the stock or bond market? I think it's also another good opportunity for those that are watching, if you have any type of debt, maybe to consider a debt elimination plan and continue to pay down or pay off and eliminate any personal debt that you have. Now, Jeremy, we've got some great tools here at America's Retirement Headquarters, I think, that can help address these areas for those people that are watching today. Do you want to touch on just some of the tools that people that are watching today can take advantage of?
Absolutely. We do have Right Capital, which is a financial planning software, which, again, we talked about stress testing for inflation, but there's also a number of factors, which I mentioned earlier, taxes, longevity, market corrections, things of that nature. But I think one of the most powerful things we do here is what we call our independent income system. And what that does is it essentially allocates certain buckets of money that for the current year, 1 to 3 years, 5 to 7 years, 7 to 10, and 10 plus. What that does is enables us to have your future laid out for you, and then you know how much of your assets that you could leave in the stock market and take that risk to get that rate of return you need to keep up with inflation, keep pace with inflation. So the independent income system, the Right Capital software, are two tools that come to the top of my head that are useful.
Absolutely, and thanks for tuning in today's show. Today we talked about skyrocketing inflation, give you a couple different tips, and we're talking about how President Biden might impact your retirement. This is the fourth series in a four-part series talking about the different ideas that we shared with you today. If you picked up a good tip or two, what I would encourage you to do is, again, not only get time on our schedule and let's talk, we'd be more than happy to schedule a strategy session with you. But if you did miss any of those past shows, you can get those past shows on our YouTube channel. Just simply subscribe, again, at America's Retirement Headquarters on YouTube. We also have our office telephone number and contact information for our office here in Ohio and also for our Michigan office. So thanks so much for tuning in today. Again, I'm Nolan Baker, joined by Jeremy Baker. We're here from America's Retirement Headquarters.